trailing at the high of the previous bar. And then we do that for one more bar. And then once the sixth bar from our entry bar plots, this is where I like to adjust to the DPI price. And we're always going to use the opposite color DPI price as our stop. If you decide to trail in this way, the high or low of the previous bar is certainly acceptable. But this is the first point where the green DPI price is better than break even. Now, adjusting from the high of the previous bar, we do give up some ticks. In a sense, we have, or I like to say, secured ticks that we had secured by having a stop in place at a certain point. So, to me, it's worth it to loosen my stop by 7 ticks to give me a better opportunity to catch the rest of the run. So it doesn't always happen. Occasionally, if you do this, you may widen your stop here to the green DPI, and the next bar is a turn bar. And then, yeah, we could have had 7 more ticks, but we didn't know that at the time. So if I look at this situation, there's no way to know that the next bar is going to be a turn bar. But I find that widening to the DPI price gives me the best odds of taking in or staying in this run as long as I can. Next bar plots, we just simply adjust to the green DPI here and keep adjusting after each new bar plots to the new green DPI price, which it will change by 4 ticks. It'll always increase or decrease by 4 ticks. And then finally we get stopped out. So now we could very well have stayed in this trailing at the high of the previous bar and likely would have ended up with a few more ticks. But we don't always know that that's going to be the case. And you know, there are pros and cons to both of these trailing stop strategies. I prefer just to widen to the DPI, leave my stop where it is, and whatever happens, happens. I'm a very firm believer in once you put your order in, we leave our stops where they are. That is the amount of risk we're willing to take on any one trade. And if we're not willing to accept the risk that comes with entering a trade, then we probably shouldn't take that trade. So, and I know it does take some conditioning to, especially if you're the type that likes to watch the P&L while the trade is on. And it may be a bit nerve-wracking watching the price go up and down before it hits the profit target. So, but the way I get past that is remind myself that this money management strategy is effective over time, not necessarily every single trade. I know that I'm going to have some losing trades. And it's just part of trading. So I really am against the woulda, shoulda, coulda type thinking that I think is common for not necessarily common, but I think it's easy to find ourselves in that mode of thinking with trading. Because hindsight, of course, is 20/20. Anyone can make the correct trading decisions in hindsight. So as soon as something happens, you know, if there was a trade we were kind of questionable about, and then it goes on to win, oh, I knew I should have taken that trade. Or we get into a trade and it goes against us. I knew I shouldn't have taken that trade. And that's why I like to stress making that decision before we put our order in. And then regardless of the outcome after that point, we have to be okay with our decision. I save myself so many headaches by doing that. And saying whether this trade wins or loses, at this point, when it's time for me to make the decision to enter the trade, I've decided that this particular situation is too risky for me. I'm going to pass on it. If it wins, I don't even think about it. because I made the decision to stay out. So it shouldn't always matter what the outcome is. It just matters that we're okay with the decisions we make during trading. So I find that having kind of changed the way I looked at it um, when I first started with Pro9 Trader a couple years ago, um, has saved me a ton of headaches. So, and I know trading is nerve-wracking at first, um, and that's very natural. I'm pretty sure almost everyone experiences that when first starting out, and it's really something you just have to train yourself or condition your self to not be so emotionally involved in trading, which is easier said than done. And I'm sure most would agree that that's the case, but you can train yourself to kind of take a step back and look at it as just uh, a numbers game instead of, I mean, it's hard to describe a way to remove your emotions from it, but it is possible. And another way I like to get around that is by not being so concerned with the results of each and every trade. Some days are going to be rougher than others. Some days are going to be choppier. Some days there's going to be losing trades we just couldn't avoid. It looked like a textbook setup, and the market just didn't move that way. Going to happen. We have to accept that and be okay with that type of stuff before we start trading. But the important thing is that over time, the odds are in our favor. All right, so back to our trade here. After this surf trade, if we had decided to enter this, was a pretty decent trade. And now we're in this area, which I do point out. All right, Diane, understandable. You have a great weekend as well. I will be sending the recording out for everyone after the class. I did miss the first 10 or so minutes, but all of this was on there. Now we're heading into this area, which I'm sure everyone's heard me if you've been in this class before. Something I do like to stress as well, because I find it's very important, and this has helped me. Once I noticed this and started paying attention to it, this has kept me out of so many rough patches in the markets and helped me avoid quite a few losing trades. And this is really one of my first things that I notice when we're looking or when the market's heading into chop. This to me is a sign that we may be heading into chop, so I'm very, very cautious once I see these EMAs kind of running into each other, the 200 and the 50, especially the 20s on top of the 50 here. Once these start kind of funneling in together, that's my first warning sign. Kind of pump my brakes, reassess the situation, maybe not be so eager to enter some trades here. And we'll just come forward a bit, and then here we start to see our chop develop. And notice from back here, I may be able to avoid a losing trade. So I say here, well, I've seen this EMA stranglehold is one way to look at it. But our EMAs kind of create this narrow range of support and resistance that the price has trouble breaking out of sometimes. So from this point, I say, okay, I'm gonna pump my brakes. I don't want to just hop into any trades, even if it is qualified, because I usually see chop develop out of this type of situation. So I'm not going to take any trades here, just watching the market. And here is where I can confirm chop. I mean, even right here, you can be pretty sure that we're heading into chop. I've got some EMAs here roped on top of each other. Purple line kind of hovering around in the middle here. It's not super close to the zero line, but it's not really far enough away that we have a really strong established trend. And same with the super trend. And another, and probably one of the strongest indications that we're heading into chop is our blue line here, bouncing around in the middle, not coming to its extremes. We really want to see the blue line traveling back and forth between its extremes pretty consistently throughout the day. So all of these signs combined give me a very clear indication that the market is consolidated and I don't want to enter a trade anymore. So not while this is happening. I want to see the price move out of this range. I want to see my indicators tell me we've come back to a definitive trend. And I think the simplest way to look at that is that most of our trades are trend trades. So why would I want to take a trend trade when there is no clear trend in the market? And I think when you just look at it like that, it's very simple, but straight to the point, and the answer is you wouldn't. So, and now I have a couple turn bars, close proximity. Again, blue line bouncing around the middle here still. And if we weren't sure before, we should be 100% sure now and should not enter any trades until we see the indicators return to the levels we like to see them at that tell us we have a clearer trend, namely the blue line going back to an extreme, EMAs fanning out, not so many turn bars. Now I know there's only two, but coupled with all these other signs, very clear signs of chop. We had a qualified continuation here, but again, we're not taking any trades because we recognize that it's chop. Would have gotten stopped out. So, and again, I'm not going to take a trade until I see a return to clearer trends. And another way I like to do it to be extra safe is wait for a trade to win without me. I want to see a qualified trade go on to hit its profit target. It may go on. It may be the longest runner of the day, and I passed on it. I'm okay with that because up to that point, it was too risky. And even still, we have this qualified momentum here, but I'm not really confident that I'm out of chop yet, right? I mean, I've seen the price bars move up past our EMAs here. I mean, just because this range is created of these EMAs and the 200 here doesn't mean that the support and resistance lines are right here, right? Instead, we see seems like they're right about here. So we have different levels of the support and resistance, but seeing the EMAs like this gives us a huge heads up that that's likely to be the case. So sometimes the EMAs just cross and get an order and the trend continues, but I'm always wary of this. So, but again, even though we have this qualified momentum, it's farther past these EMAs than we've gone before, but that's not a guarantee that it's going to win or that we're out of chop. So I would definitely wait for this one, see what happens, see if it goes on without me, and see what happens after that. It could very well plot this bar, and then we can get a turn bar and come back down, and then we're back in chop. Or we were still in chop, it was just a kind of a little fake out to give us the illusion of a trend, or that a trend would start again. So all right, I did see something here in the EMD that I wanted to go over. And I wanted to take a look at this one specifically, this momentum, as it is a qualified trade. And it's a very peculiar, not necessarily peculiar, but it's one of these things where, we say when you're heading into the high of the day, we want to have enough space to hit our profit target, or I want my purple line to be outside of the neutral zone. Some days, breakouts, and some periods of time could be extended. Breakouts aren't as strong. So blue line's just coming out, but look at what I'm seeing here. I'm seeing some momentum or some divergence here on the blue line. I don't see an extremely strong trend. Well, it's outside of its neutral zone. So let's go back here so I can super trend kind of leveling off. And I haven't seen previously some very strong or some very long trends. Been kind of these short cycles. So this one only went to 10 bars. So I haven't really been seeing any runs that go beyond this bar range here. So I may be a little reluctant to take a momentum so late in the run when this has been the case, or if the market's kind of moving a bit slower. So one thing I usually like to do is if I'm questioning entering a trade that's like right on the high of the day, or if I'm a little wary of it, I'm just not feeling that we're going to push through, I will enter it as a breakout instead. So I'd enter at one tick above the high, and this is usually better illustrated when we just came off a long run, have a turn bar, and then have like another continuation heading right into the high. And I may not be as confident in that continuation. So occasionally I do just enter it as a breakout. But again, we can only enter a breakout up to bar 10. So since we're past that point, I would just pass on this trade in general, as I have quite a few signs that upward momentum isn't as strong as I think, and that's a lot because of the previous leg lengths and this divergence here. Now, divergence isn't always or divergence on the blue line isn't always the strongest indicator that the momentum won't push through, but it is something I do look at and consider, especially in particular situations like this where I'm not extremely confident that we're going to push through. So I'm kind of getting some mixed signals here. And especially during periods like this where the markets have been fairly slow, volumes down across the board, and especially with the EMD, it doesn't have a ton of volume when compared to other markets like NQ or YM or CL. So if I'm feeling a little wary of the trade, it's okay to pass on it. I know some people who just don't really like breakouts in general, and that's totally fine. You don't have to take all the trades or particular setups. But entering it as a breakout instead, when that is applicable, I like doing that because I've seen that pushing through the high, I mean, of course we can certainly push through the high of the day and still, a couple ticks and then reverse and hit our stop. That's going to happen. Happened to me plenty of times. But the reason I like to do this is I feel that once we push through that high, even if it's just a tick, um, I have slightly better odds than if I entered before on a kind of questionable situation heading into the high, and could just bounce right off the high or a tick or two below. We don't even get to that point where we push through. So, and we can kind of also see that in the super trend, just that we don't have a extremely strong upward momentum here. Coupled with this blue line coming down, I kind of have this cycle starting with my super trend. And have just come outside of the neutral zone here with my purple line. And mainly it's the divergence that I do kind of keep an eye on, and when that gets really strong and I get a late momentum that's pretty late in the run, I'll usually just, kind of pump my brakes and pass on it. I don't really have a problem passing on a momentum trade. Or really any trade. If I don't like the setup or I kind of feel questionable about it for whatever reason, I'll just pass on it and move on to the next one, wait for the next one. I know the markets they aren't going anywhere. They may kind of come to a standstill for the day. It is Friday. Markets are typically a bit slower on Friday, but not always. There's, still some opportunities to be had. All right, so you guys feel free to holler some questions out there if you have any. I know some may not have gotten the email of the reschedule. So here we have the TF, and the Russell is kind of in a weird spot right now. I'm sure everyone's excited that it's on the CME. I'm really glad too, as the data feed for the TF is pretty expensive. So since they moved it from the ICE exchange, it's now listed as the RTY on the CME. But volume is kind of split right now. So not only is volume down just flat out across the board, but volume is split in the TF, or between the TF and the RTY. And they may be for a while. So when you're looking at these markets, I really, really want to wait for the creme de la creme of the setups. Because you may see it be a bit more choppy. Or not have the follow through that the trade setups normally would. But again, from the outset, I have my EMA stranglehold situation here, and that's pretty reflected by this area of chop here. So we did have this continuation or single T that could have been avoided, barely qualified anyhow. Look at how my EMAs are roped together, but a similar situation as we saw on the YM. Once these EMAs kind of start moving together and we get locked in this range here and just kind of bounce back and forth. No qualified trade yet. And again, I like to wait for one to win without me. So even though this long run went, um, I would probably even pass on the breakout here, if that would even actually be the breakout. Yeah, it looks like the entry would be one tick above. The DPI was one tick above the high, so would be a qualified breakout, just barely, if even so. Yeah, just barely. So I wouldn't be too excited about that. I mean, if we're looking at this type of situation, could very well hit some resistance. So I may resign myself just not to enter a trade in this run at all, because I still haven't really seen a trade win without me. And we're getting into this kind of situation where I have the 200 a little below the high of the day, so it could be getting some really strong resistance lines here. Then I have a momentum right before my turn bar, but perhaps we wanted to wait and see a really definitive trend start again. And then we have our first possibly qualified single T. We might not have crossed the 50 here. So it looks like we didn't quite touch the 50, which is needed in the single T when the 200 is not in the correct order. So would have passed on that one, and then had this one, which again, same story. So I may not have been able to take really any of these trades in the TF. And I do like the single T when it bounces off the 50, as long as it actually touches that exact value. So it may be slightly different on your charts depending on the data coming in. But then if we take a look at the RTY, we'll see fairly similar story here. Whoops. But you can see these markets move fairly similar to each other still. Well, it is the same market, even though they're on different exchanges. So you'll get slightly different data, and charts will usually be fairly close, but because there's probably less volume on the RTY at the moment, you won't see as much movement for the time being. So it's going to be listed on both exchanges. It's still going to be listed on the ICE exchange until June of next year, but I'm sure a lot of people will start migrating over sooner than later. I still like the Russell, whether you're on RTY or TF, but something to keep in mind, given that the markets are kind of slow and there's some rougher days more often than not during this period. Just exercise a bit more caution if you're trading these markets. So. Nothing wrong with noticing when the markets go through they're kind of slumps. Pretty normal. I think last year August was like the slowest month on record. I may be mistaken about that. Someone mentioned that to me sometime, so I should probably fact check that. But markets do that. They go through periods. It's typically July and August. If you look through last year, look at before July 4th, and then after July 4th through August, you'll see a lot of fairly rough trading days, and August was, pretty dead. So not out of the ordinary. When that happens, I still like to watch these markets, as there are some days that still present really great trading opportunities, but they're just a bit less frequent. So there are plenty of other markets to look at. Some of the precious metals I know people like to trade. I haven't been checking those out too much. I know silver's been doing well, but there's platinum, palladium, and these markets don't move a ton, but uh, they tend to trend pretty well. So you may get one or two setups a day, uh, but they're pretty good setups. So something to keep in mind with that. Also, a market I really like, I've actually been waking up pretty early to trade, and that's the FDAX. So the margins are a bit higher, um, and the tick value is a bit higher at 1250 a tick. So if you're not comfortable with that, you may just want to wait until you build your account size up a bit before you start trading the FDAX. But it is for those, maybe you want to wake up an hour or two earlier before work so you can trade for a bit. But you can see some really good runs in here. Just a very kind of clean, strong, consistent trend throughout the day. And this was a really great run here, obviously. But it's open from like 3:30 a.m. Eastern to roughly 12:30, and then it switches during daylight savings time. So depending on what time zone you're in, I'm in Pacific. I've been waking up at 4:35, so I could start trading about 5:36. But I do find the setups to be really strong in the FDAX. So it does. You'll either see it, and I like the FDAX because you'll either see it like this, where there's a pretty constant trend throughout the day, or it just kind of cycles and is pretty obviously choppy, where there's not going to be a ton of questionable setups anyhow. It's just going to be obviously choppy. And during that, and I mean, you only need one or two good trades in the FDAX anyway, and you could be doing well for the day and even take the rest of the day off. Catch a runner or two in the FDAX and you're pretty well set. So there are other options when our markets kind of slow down, and I know other people have different schedules as well. So if you're looking for different markets to trade, depending on the time, there are some European markets that are open for way before ours, and then after ours, markets are closed in the evening Eastern time. You'd be looking at something like the 6A, which is the Australian dollar, or some of the Nikkei sessions, maybe the Japanese yen. Those are all open. I want to say around 6 to 7 p.m. Eastern. So there are some other options for markets. The markets we cover are our preferred ones. They're pretty standard, consistent markets. But some of us work during the day and can't trade every day or throughout the day. So if that is the case for you, just know there are some other options. So, but of course you always want to check, get all the details before you jump into a market. And I always suggest you want to do your research too. You don't just want to jump in and blindly start trading a market that we don't have any experience. I mean, the setups usually look the same, but you also want to make sure the market moves enough to present enough trading opportunities to make it worth our time. In the first case, I mean, you can have a market that moves a ton, but it's always choppy and we never see any trade setups. And if that's the case, we don't want to, watch it all the time. So do your research. I always suggest trading a market you're interested in on sim for a bit. You know, it might only be a couple of days, a week. Uh, you know, it depends on your um, just how quickly you can assess if it's a market you like, and also does help to just kind of go back historically and just check. You know, you don't have to do it for 6 months, but just kind of glance over and see how many trade setups it presents through a day. Does it usually present a couple, um, or does it stay kind of flat? Um, and then you also want to double check the margin requirements and the tick values, because that can make a huge difference. Taking a full stop in the CL is you know, double what it would be in something like the NQ or the Russell, and that might be a huge difference depending on our account size. So you kind of want to keep that stuff in mind. The amount of drawdown we're comfortable with, the amount of risk we can accept for a certain, or just for our trading in general. You know, you don't want to get into a situation where you get into a market and yeah, it's great, it has, you know, $20 a tick, but you don't want to get into a situation where one stop loss eats into your margins and you can't trade 3 contracts. So you want to have a little cushion, and keep that in mind, because there's no guarantee that the first trade we take on any given day is going to be a winning trade. Someone, and I'm sure this happens to plenty of people, they practice in sim for, I mean, they could practice in sim for a month and they do excellent. And then as soon as they switch to live, they're super confident, ready to go, and the first trade they enter is going to be a losing trade. It's going to happen to someone. And has happened to me, actually, many years ago when I first started trading with Todd. He was introducing me to Pro9 Trader before it was ever on the market, and we were actually going to kind of, I was kind of trying out to be a trader at that time and had been doing pretty well in sim, and then the first day in with live money, it didn't go so hot. So, and I know that's happened to other people. So you just want to be prepared for that. Could happen when we switch to a new market. And I actually don't mind when that happens. Just on a normal trading day. I actually prefer doing the daily dissections on markets where the first trade is a loss, because I think it illustrates really well that, you know, if you can just shake it off, accept the fact that we are going to have some losing trades, and stick with the plan, and you'll often see through some of the debriefs that after that first loss, you can usually recover if you just stick with it and take the rest of the trades. So, all right, we have a few minutes left, everyone. So if there are any last-minute questions, feel free to throw those out there. I want to make sure everyone is clear in case something we didn't get to cover today. So I know we were a bit delayed starting. I'm glad to see a couple of you could make it in. Do apologize if any of you set aside time and didn't get the email in time. It was fairly last minute when I realized that we would have to reschedule. So I would like to thank you guys for joining me. Apologize for any inconvenience. And we'll make sure you guys get a recording as well. And if you guys have any questions that pop up later, feel free to send an email to support@academydaytrading.com. We'll get back to you as quickly as possible. Or if you have any feedback, if there's any kind of more specific things you would like covered in this class. It is for you guys, and your suggestions can always help us improve. So we want to make sure this is the best class to teach you guys how to use Pro9. So if there's anything you feel that should be covered more or kind of zeroed in on more, feel free to drop us a line. And just let us know, because there could be something I don't really consider that should be brought up. And it may be something that I take for granted. So I try to look at it from the perspective of a newcomer and things that have helped me as I've learned this. There's always new stuff to learn. But you know, sometimes when you're teaching something and it's a subject you're familiar with, you may not always realize where those gaps are. So feedback on that is always helpful, and it helps us improve the class for any future participants. So, all right, looks like there's no questions. So I hope you guys enjoyed this lesson. Hope you're able to pick something up and can add it to your trading. My goal is always to teach someone or hope that someone walks away with learning at least one new thing. I do kind of cover the same subjects quite a bit, but I feel they're very foundational concepts to learn with Pro9 Trader. So thank you everyone for joining me. Again, I hope you're able to walk away learning something new. I hope the weekend treats everyone well, and the rest of the trading day. Hope we get at least a couple more good trades. So until next time, happy trading.